If you'd like to find out how to get your own program on Bali 92.3 FM, send an email to contact@balimail.com or call 855-BALI-92, 855-265-5992. If you'd like to
The
find out how
following
to
program is brought to you by Realtor Nagaraj Annaiah.
You've got a job, but no house. Savings, but no equity. A family, but no backyard. Even your favorite Zillow listing, but no approval. Realtor Nagaraj Annaiah, your trusted Bay Area real estate expert, will help you. Whether you're a first-time buyer, investor, or here on a visa. From buying and selling to mortgage solutions, Nagaraj Annaiah has you covered. Call 858-880-4577. That's 858-880-4577. Or visit nagarajhomes.com. Find the home that fits your future.
You're listening to Real Estate Roundup. Realtor Nagaraj Annaiah every Sunday from 12:30 p.m. to 1 p.m. PST on Bali 92.3 FM.
Hello, Bay Area. Happy Sunday. I'm your host, Realtor Nagaraj Annaiah. Today, I've joined by the host, Elder from the CPA Dude, and we're talking all about the real estate and the taxes. There was a recent survey conducted by economists at the University of California, Berkeley. Report shows that top 400 wealthiest Americans' effective tax rate fell from 30% in 2010 to 23% in 2018. Like how the real estate played a role also, to talk all about the real estate and the taxes, joined by Elder. Hello, Elder, welcome to the show today.
Hi, Nagaraj. Thank you for having me.
Yeah, listeners, we are live on a Bali 92.3 FM station, and we are live on YouTube also. If you have any questions, do give us a call, because this is very, very important to know how the taxes play a role and how can you save it also. So if you have any questions, do give us a call. Our studio line numbers are 877 Bali 92, or give us a call. You can text us, or you can leave your comments on YouTube also. The Tony Elder. So what I was telling you, right? Like initially, like how this wealthiest people are reducing it. What's the take on that?
Definitely, yeah. So as you mentioned, the change occurred from 2017 onwards. So in 2017, we had a major tax law change where we had 100% bonus depreciation. So previously it's just 50%, but in 2017 it got increased to 100%, which made buying and investing into real estate much more attractive going forward.
Wow. And I think that 100% bonus depreciation is like a lot of people are using that one as the trick for buying a real estate, right?
Definitely, definitely. So we have a lot of people out there buying, short-term rentals like Airbnbs, VRBOs, or doing real estate full time and buying, midterm, long-term or commercial properties. No, regardless of what strategy you do, you can bonus appreciate the property and realize massive tax savings.
Wow. See, recently one of my client bought a 8 unit multiplex in a Santa Clara for 2.75 million, right? So they can both are on husband and wife, both are on a W-2 income. For them, how does this apply? Like, how can they save a taxes on this buying a multiplexes?
Definitely, yeah. So if they're both full-time W-2 people, they can short-term rent the entire property. So short-term rental would be your average stay for the year would be 7 days or less. You need to show 100 hours of work on the property and more than anyone else. But as long as you meet those two criteria, you'll be able to bonus depreciate the property and offset your W-2.
So basically, if it's a 8 unit, any one unit, if they convert it into Airbnb, then that unit they can depreciate faster depreciate. Is that
That's
my
correct.
understanding?
That's correct.
So like every year they can do 1 or 2 units to depreciate, because normal depreciation for the commercial properties are 31 or 32 years, right? Being an 8 unit.
Correct. So commercial property is 39 years.
Uh,
But yes, as long as they do a short-term rental on all the units in year one, or maybe one unit and then second unit in year two, then
uh-huh.
yes, you can bonus depreciate pretty much any unit when it qualifies.
Got it. And one of them also, right? Like the client had called me up and they were telling me, Nagraj, I want to sell the one property and buy the second one. How does it, like, if they have the first one, how they can reduce it? Like the same trick, right? Like the bonus depreciations, that is a trick for them. Instead of selling it, they can increase the value of it.
So they can do that or they can do a 1031, right? So in a 1031, they can sell their existing property. They will defer all the bonus, all of the depreciation recapture. They'll not have to pay any tax on the depreciation already taken. They're also going to defer all tax on the gain. And as long as they roll over the entire amount into a new property, they will pay no tax on the sale.
Wow. But for that one, they need to convert instead of the primary residence, they need to be showing as an investment property.
That's correct. That's correct. So if you want to do a 1031, you should rent out the property for one to 2 years before you do a 1031 with it.
Okay, awesome. Listeners, myself, Realtor Nagaraj, and I am joined by Elder, and we are talking all about the real estate and how can the taxes can build your wealth, help you to build your generational wealth, saving on your taxes. That's what we are talking about. If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. Elder, one more important thing is the government shutdowns right now, right? Like what we are noticing in is like with the federal government shutdown, the IRS is on a slimmer budget and a trim staff, but still the tax bills and deadline didn't get passed. How does this one impact on the if somebody is looking for amendment or like tax filings?
So the IRS is technically shut down. However, they are still performing certain work. So for
Mhm.
example, if you file your return and a refund is due, they will still send you the refund.
Mhm.
However, if you try and call them or get a hold of anyone, there's going to be long wait times, or it may not be possible to get a hold of anyone yet.
Mhm.
We're also probably going to see a lot less audit activity, so a lot less audits going on.
Mhm.
And then overall, if you're looking for things like maybe like a private letter ruling, or an opinion, that's
Mhm.
probably not going to be possible to get from the IRS.
Wow, okay. But so if somebody is looking to talk to the directly, the customer case might be a difficult because of the reduced people also, the support staffs also right now.
That's correct. That's correct.
So now being an open enrollment time, right? Like all the companies have started an open enrollment. What all they need to be looking around during the open enrollment?
Definitely, yeah. So open enrollment is usually November for most big companies.
Mm-hmm.
So open enrollment covers a ton of different things. Your retirement plans, your medical plans. So I would say the biggest thing that you should be focusing on is changes to your medical coverage. So
Yeah.
if you have a certain type of insurance, you can get an FSA or an HSA. So
Mm-hmm.
FSA is use it or lose it. You have to fund your FSA ahead of the year, and
Mm-hmm.
then you fund it for 2026. And if you don't use this amount, only $660 will roll forward. Just
Mm-hmm.
be sure that you use it or you will lose it. And then if you have a high deductible healthcare plan, you can get an HSA. An
Mm-hmm.
HSA is an awesome plan. Your contributions are deductible, and you can invest the plan for tax-free growth, and then you can use it anytime for anything remotely medical. So make sure you choose to get either an FSA or an HSA, depending on which is offered for your plan.
Yeah. What about this 401ks and ESPPs also? What they need to be looking for, especially being in 401k, right? The contributions.
Definitely, yeah. So make sure that you do elect to contribute into your 401k for the year 2026.
Mhm.
Try and max out your traditional bucket. And then also, if your company allows it, do max out your mega backdoor Roth. So
Mhm.
a lot of the companies that you work at do offer a mega backdoor Roth. It is an additional plan to
Mhm.
your current traditional 401k.
Mhm.
The cool part about a Roth is that your contributions are not locked in. So if you max out this amount, it's not like the money is locked there forever. You can take out your contributions at any time, any moment, no tax, no penalties. Only your growth is locked in. So if you're looking for a place to park cash, definitely put it into a mega backdoor Roth.
Mhm.
And then ESPPs, right? So ESPPs usually lock those in December for the first period. So
Correct.
do max out your ESPPs, 25K per year on purchases. And then
Mhm.
if you're able to, I would recommend selling them the very next day upon purchase.
So ESPP is the one they need to look around. 401ks, the Roth stuff's also what they look for, and the one is the even the HSA plans also.
Yep, definitely. HSA, FSA, 401k, mega backdoor Roth, and then ESPPs.
Okay, these are the terms to remember, listeners. Like myself, Realtor Nagaraj Annaiah, and I've joined by Elder from the CPA Dude. We are talking all about how to do a wealth building and proper strategies, how you need to do it. If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92. Since being an open enrollment time, if you have any questions to talk to them, do give us a call too. So these are the four things to look for when you're doing an open enrollment. There are some companies, if they miss the open enrollment, they allow for the later use also, right? Depends on the companies to companies.
Definitely, yeah. So if they have what's called a life-changing event, you are able to switch your medical coverage and your medical plan. So life-changing events would be like the birth of a child, getting married, potentially getting divorced, moving from
Mhm.
place to place. So I mean, a lot of events qualify. So if you do have a life-changing event, just be
Mhm.
aware that you are able to change your plan mid-year.
Yeah. So watch out for that, listeners. And one more important thing is, right, like I think we discussed this couple of times also. One of our known by homeowner bought a property in Livermore for a 2.4 million around. Okay. And they bought it as a primary residence. They already had the primary home in Fremont. They didn't sell it. They bought one more house in Livermore. But the plans to move to Livermore got changed because of the kids' education and other stuffs, right? Like, how can they, being renting out, can help them out to maximize their gains here? Because renting out will not give them the much breaks even for them, right?
Definitely, yeah. So if I were them, I would definitely short-term rent their new house out for 1 year.
Mm-hmm.
During that year, they'll be able to realize bonus depreciation that will offset their W-2 income. So this
Mm-hmm.
would be a 2025 or 2026 event,
Uh-huh.
depending on when they rent it out. And
Uh-huh.
then after 1 or 2 years of a rental period, I would 1031 it into properties that actually do make sense from an
Mm.
investment perspective, whether they're in California or elsewhere. They would be able to 1031 and defer all the gain and the depreciation recapture on that
Mm.
sale.
Yeah, because they already ended up buying out. Instead of selling it, the best part is do a depreciation this year. And next year, if they still think it's not making sense for them, they can do 1031, as you said.
Yep, exactly.
And this the same thing applies for somebody else not able to sell their homes this year also, right? Like instead of like wait, they put a house for a sale, but they were not able to sell it. This the same strategy can apply for them, right?
Exactly, yeah. So I mean, if you have a property that you cannot sell and you're okay holding it for about a year longer, this would definitely help out. So cost segregation studies, they do cost money, but the estimates
Right.
are free. So you
Uh-huh.
can always, re request for an estimate, and we can tell you exactly how much you can save if you were to do a short-term rental loophole and cost seg your house and report bonus depreciation on your tax return.
And to convert that one to investment property, right? Like when they do a when they do a 1031 exchange, how many years of tax filing should show as an investment property? Or like the same year it can convert it into a 1031.
So it really depends on the 1031 intermediary. They have their own standards. The most of them that you would talk to, they'll
Mhm.
want to see 1 to 2 years of rental activity.
Okay. Based on that, for example, this year, if they can convert, if somebody is right now in the primary residence and they want to put it for a sell next year and defer the taxes, the best time is to do now, convert it into a rental.
Definitely, yep, definitely.
Yeah, listeners, myself, Realtor Nagaraj Annaiah, and I'm joined by Elder from the CPA dude, and we're talking a lot of the tax saving strategies and how can it help you out. If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. That's good to know, like because a lot of condos are not selling right now. Correct. Because one of the client they tried to sell it in Foster City and they were not able to do it. I think you helped them to say that like do this 1031 exchange, do a depreciation, bonus depreciation, and next year they can do it. That's the best way to go about it.
Definitely, yeah, definitely. Because bonus depreciation, it'll generally allow you to deduct hundreds of thousands of dollars against your W-2 income. So I mean, it is a very big benefit and it is a material difference. So versus selling it for a loss, you may be better off doing the strategy. Short-term rent it for 1 year and then do a 1031 the next year.
Yeah, that's good to know. And one more important thing to know is like elder, like recently there's a higher salt deduction cap, right, with the state and local taxes in high state taxes. Is any the cap on the deduction for state and local taxes was raised for certain taxpayers, right?
That's right. So previously it was $10,000 of state and local tax, or SALT as they call it.
Mhm.
State and local tax is your California income tax, as
Mhm.
well as the property tax on your primary home. That was only capped at $10,000, so a very small amount.
Okay.
Going forward, this has increased to $40,000 for anyone who has a combined income below 500,000. So if you're married filing jointly and your income is below 500K, you get the full $40,000 cap increase. And then this cap is phased out between 500,000 to 600K, and then it's fully phased out after 600K. So if you make above 600K,
Mhm.
um, then you're back down to $10,000. However, this is based on AGI, and there are
Mhm.
tax strategies which will allow you to reduce your AGI, your adjusted gross income. And
Okay.
bonus depreciating a property will actually reduce your adjusted gross income.
Wow. Okay. So, like for example, if you're buying a selling or a remodeling in 2025 or 2026, right? Like, do this new deductions rules apply to them? Should they act before the break ends in 2026?
As
Any?
in, as in buy property in 2025?
Yeah, if there's somebody selling, buying, selling, or remodeling, right, in 2025 or 2026.
Definitely, yeah. So the change is effective for 2025. So I
Mhm.
would say if anyone does want to buy a new primary home, this would be a good time because your property tax deduction will likely count in full as an itemized deduction, and you're also going to be able to deduct your mortgage.
Let's take a call. Hi, welcome to the real estate show. Your name, please.
Yeah, hi.
Yeah,
Uh, my, yeah,
yeah,
my name is Prasad.
yeah, Prasad. Go ahead, huh? Go ahead, Prasad. We're listening to you.
Yeah, hi,
Mhm.
Nagaraj. Yeah,
Yeah.
I have one quick question.
Uh-huh.
I'm building a custom home.
Mhm.
Can you please explain any tax benefits we may get with a custom home building?
That's good to know. Elder, what's your angle on this? If somebody is building it.
Definitely, yeah. So if you are building a custom home, I would try and maybe have an in-law suite or an ADU on the property. This way, you can either short-term rent your entire home for a couple years, or at least short-term rent the ADU or the in-law suite. And this will allow you to bonus depreciate either the entire property or the ADU or the in-law suite. So this way, you're building a custom home, but you will be getting a tax benefit for the home that you're building.
And again, depends on is they are like, for example, doing it as a rep or not, right? Like, for example, if both are husband and wife not on W-2 and one shows qualifies for rep, then they should be able to write off a lot of stuffs also, right?
Correct, correct. So if you are a rep, a real estate professional, as they call it, that's
Uh-huh.
somebody that does real estate 750 plus hours per year, and it's the majority of their time.
Mhm.
So you can't have a full-time job, and it must be your main activity. But in that case, you can either midterm rent the property or long-term rent the property and still bonus depreciate the entire thing,
Yeah.
which is much easier than doing a short-term rental.
Any follow-up questions, Prasad? Okay.
Yeah.
Uh-huh.
So for I think HVAC or any the expenses we are spending, can we claim any tax benefit
Definitely, yeah.
for energy efficiency or yeah.
Definitely, yeah. So let's say you short-term rent the entire house. The entire construction cost would be considered as part of the cost variation study. So they would look at all of the assets in your property, right? So HVAC, floors, ceiling, walls, appliances, and then they would assign useful use. They would break it all down into asset classes. We would assign useful year lives, and anything below a 15-year useful life will get bonused. That is usually about 20-ish% of the entire cost. So that would be a good ballpark for you in terms of what you should expect from bonus depreciation if you were to depreciate the entire property.
Does it answer, Prasad? Any other follow-up on this?
Yeah, awesome. Yeah, thank you so much.
Thank you, Prasad, and best of luck. Yeah. Listeners, myself, Realtor Nagaraj Annaiah, and I'm live on a Bali 92.3 with the Elder, and we are talking a lot about the tax savings tips and way to go about it because real estate is so expensive in this Bay Area. If you don't plan it properly, right, then you make a mistakes after the mistakes. But if you plan properly, if you because it's as this show is all about education, because once you have the right education, you can execute it properly. If you have any questions, do give us a call. Our studio line numbers are 877 Bolly 92, 877 Bolly 92. So that's good to know, right? Like if they're constructing, they need to know all this, right? Our elder on this part.
Definitely, yes. I mean, when you're building a property, you want to have really clean records.
Mhm.
What you're spending the money on, have clear, contractor invoices. That will
Mhm.
make your bonus depreciation and cost like study
Mhm.
much smoother and likely will give you a greater benefit.
Yeah, and but for Bay Area clients, right, with high property taxes, salt changes, plus standard deduction shifts, is like potentially big strategy implications when buying or owning homes. Like, what do you see? I feel it's always adding a real estate every 2 years. It makes a difference on the saving the taxes because of the 100% bonus depreciation now.
Definitely, yeah. So I mean, you're gonna pay taxes no matter what. You may as well buy real estate instead and pay less taxes. I think it's a much better strategy. And then for those that are looking to buy a new primary home, I would always encourage them to buy a home, short-term rented for 1 or 2 years, get the
Mhm.
bonus depreciation, and then move into it as your primary home.
I think instead of completely renting out, they can do a 50% also, right?
That's right, that's right. So let's say you rent out some bedrooms, you can bonus depreciate those bedrooms as well as the shared spaces. Or if you have an in-law suite or an ADU, you
Mhm.
can move into the in-law suite 1 year, bonus depreciate the property, and then do the opposite, move into the main house, and then bonus depreciate the in-law suite or the ADU.
Yeah, that's a super trick on that, right? Especially if you're buying a 2 million, 2.5 million property, where you have 4 bedrooms, 5 bedrooms, one bedroom renting out, or like moving into in-law units. That's makes a lot of benefits out of it. Because if it's a 3 million, almost close to $1 million is what the depreciations are coming down, right? Close to it. Depends on the construction cost.
And the land value. So land value in the Bay Area is expensive. So if you're buying a home, do consider land value because land cannot be depreciated.
Yeah, basically for a 3 million, maybe a 2 million is a land value also, right? 1 million is still is a good amount to write off.
Definitely, yes. I mean, land value is usually about 50%. So if you're
Yeah.
buying for 3 million, your structural value is usually going to be around 1.5 million, and bonus depreciation on that will likely be about 300,000 or more.
Yeah. Okay. Now let's talk about a math, elder. Okay. How to make the math works positive when you're selling it. Okay. Let's say you bought a condo for 1.4 million. Okay. You put in a 150K in upgrades. Now you're trying to sell this year on 2025, but condo values have reduced now, let's say, and there's nobody is buying it out, and you're losing almost 150K. How do you turn it into a positive value now?
Definitely, yeah. So if you were to buy a condo for 1.4 million and then have 150K of renovations in there, your basis would be 150 it would be 1.55 million. So the cool part about a condo is that there is no land value, right? The
Mhm.
condo is the condo, there's no land, so you can bonus appreciate the entire unit.
Entire.
So if you were to keep it and bonus depreciate it, your bonus depreciation amount would be about 380,000 maybe. Could be more, could be less. But let's assume that that was it. And then also let's assume you're in the top bracket.
Mhm.
So this would help you save around $15,000 in net taxes, just by converting it and holding it as a short-term rental for 1 year.
And on top of it, like 380,000 will reduce on your W2 income. So it was almost like 120K.
Correct. Yep.
Yes.
Correct.
So they can turn this negative now into a positive holding into it.
Yes. Correct. So sorry. So my math is a little bit off. They will save about 140K in taxes.
Yeah. See, that's how the real estate's power when you use it right way.
That's right. That's right. That's also why a lot of wealthy people never really sell real estate. They'll either buy more or they will 1031 into bigger properties.
Yeah, recently I got one call from one of my clients. They're saying like this year is ending. They wanted to buy a 4 million because their income is close to a 6 million this year. They want to buy a 4 million property immediately so that way they can write off for this year by doing this bonus depreciation.
Definitely, yeah. As long as they close by the end of the year and also have one renter or a couple renters in before the end of the year and also 100 hours of work, they will qualify for 2025.
Yeah, that's good to know. Listeners, like for to talk about all this is where we are conducting a real estate event. This is in a fourth year. Real Estate Connect event has become the most trusted and sold out real estate and wealth building conference in the Bay Area. It's happening on December 13th, Saturday, 10 a.m. to 2:30 p.m. at ICC Milpitas. That is where the experts like Tony Elder from the CPA dude, and there would be a there would be a CP Jain from mortgage lenders. Lot of featured speakers will be there. They'll come and talk about how to find and evaluate high potential investment properties, structured deals, and financing intelligent. We talk all about this. If you're not registered for this event, go to nagarajhomes.com and register for a real estate connect event happening on December 13th at ICC Milpitas. It's a free event, but you can talk to the experts like Elder and Tony on the same day and understand how they can help you to leverage or reduces your taxes, because it's very difficult to catch hold of them, but you can talk to them in person there, get all the insights from them directly. So if you're not registered for that, because they are the experts on the tax savings and they can guide you on this. To register for this event, go to nagarajhomes.com. Elder, if somebody wants to reach out and book an appointment with you and discuss their tax related questions, how they can do about it.
Definitely, yeah. So you can book a free discovery call. Just go to go.thecpadude.com. That's go.thecpadude.com. Fill out your information, book a call with us, and then we will chat with you and see how we can help you out.
Yeah, and I think he's throwing out a lot of good discounts for my client. Just mention my name, Nagaraj Annaiah, and you should be able to qualify for good discounts when you talk to them, the Tony or Elder or his team from the CPA dude. So if listeners, if you want to know more about my listings, like there's a couple of listings coming up next week in San Ramon, Dublin, and Sunnyvale also, you'd like to know more about this, go to nagarajhomes.com and click on a WhatsApp icon to connect with me. And if you're not registered for the Real Estate Connect event, go to Nagaraj Homes also there to register for it. It's a free event. Don't miss out. Thank you so much and have a wonderful evening.
Advertise your business, product, or service on Volley 92.3 FM. Volley 92.3 FM. And get instantly connected to the Bay Area South Asian Summit.
Yeah, thanks, Elder. It was a good show. 1 second.